Welcome and thanks for listening to Finura Group's podcast, The Game of FinTech. Today I'm your host, Danni Le Grande, and I'm a partner here at Finura Group and head up our consulting area. In our episode today, we're going to be unpacking some of the key findings in the Investment Trends 2022 Advisor and Advice Technology Report. So this was a benchmark survey of 5 end-to-end technology providers. So we're looking at technology providers that are providing end-to-end advice in their applications. 15 application solution providers. So think of those ancillary applications that you might be using around your core CRMs. And client portals, risk profiling tools and advice production tools, 6 digital advice providers and 2 investment platforms. So what we did was examine each of the various offerings against the jobs to be done in the advice process and provided a roadmap of current capabilities and recent developments. The hope is that by sharing our findings and insights throughout the report, we can help inform this process and really empower advisors to make the best decisions when it comes to choosing their technology partners. We're really lucky today to be joined by Dr. Irene Guiatmasa and Paul McGivern from Investment Trends. Dr. Irene is a seasoned researcher with 2 decades of experience spanning academia, market research and financial regulation. Irene leads the Investment Trends team of industry experts and statistical analysts. We've also got with us Paul McGivern, who is a director of CoreLogic and partner of Comparative Business Benchmarking, which is the leading provider of benchmarking to Australian financial service providers. Paul brings a depth of industry experience to his role as Director of Finance and Operations within Investment Trends. Welcome, Paul and Irene.
Thank you for having us, Danni.
Thanks, Danni. Good to be here.
So we haven't had such a comprehensive and detailed report into the advice tech ecosystem and the specific functionality offered by providers for a couple of years now. So why now? Paul?
Yes, thanks, Danni. So the report that we created this year is a renewal of an earlier version of our Advisor and Advice Technology Report, which really just focused on the larger end-to-end providers. So this report has been substantially revamped and expanded to include the application solution providers, as you mentioned a moment ago, digital advice providers and the platforms, which recognises that there has indeed been a proliferation of specialist and niche providers throughout the jobs to be done sort of workflow in providing advice. And we sought to gather as much information as we could about what these individual providers are doing in the market at the moment.
That's great. Couldn't agree more, Danni. As Paul mentioned, perhaps the question of why now is of a rhetorical nature on the in the current environment when we consider that there's a stronger and stronger resolve from the entire financial ecosystem and even our policymakers around actually solving this financial advice issue, from the perspective of quality, affordability, accessibility, from all angles that you look at, there's great commitment in solving that problem. So now is exactly the right time in our view. And perhaps the question that does excite us is, why did we approach this problem the way we did? And that new jobs to be done framework that we're bringing to the consideration is quite an important one indeed.
Yeah, great. And the report is obviously quite comprehensive, and we really did see that, to your point, Irene, the amount of technology providers that are actually putting really solid efforts into building out functionality that's really going to help advice businesses hit those pain points that they're experiencing. So, Paul, can you talk us through the methodology and how the report was put together?
Yeah, sure. Thanks, Danni. So actually, with your help at Finura, we were able to create a new baseline questionnaire for the end-to-end providers. So that helped us establish their breadth of capability so we could do some comparisons around them. And for the application solution providers and digital advice providers, we provided a shorter but similar sort of breadth of capability questionnaire, which enabled us to objectively see who did what and to what extent we're able to provide that capability across the areas that we examined. So this enables the purchasers of the report to see who does what in the jobs to be done workflow and to what extent. So it's a simple way for anybody using the report to quickly scan and understand the offers in the market. We spoke to a large, almost all the contributors. There were 28 in all, and they took us through a roadshow to explain to us, firstly, what they did, and then secondly, the most recent developments that they had done in the during the course of 2022. And they also provided us with some collateral around examples of how their offer worked, and then examples of what they had done recently in the development roadmap that they'd had. So a really good overview of the offer in the market. And we've also done an overlay too of our views on what we thought was good, and then potentially some things that were less sort of fulsome in their offering as well, so people could get a bit of an opinion from us as to where we observed particularly good functionality and where there was potentially some gaps.
Yeah, great. And I think, just sort of partnering with you guys on the report, we did pull out some of those specific functionality. I think we looked at over 300 pieces of functionality that existed, particularly in the end-to-end providers, and where those solutions actually fit into functionality that they can provide advice businesses. So quite a comprehensive report that sort of does provide some really good insights. With that in mind, we sort of put together some key insights once the report was put together. And I just wanted to go through those now. We've got 4 key insights that we sort of found were really evidenced in that report, and also sort of match up with what's going on in the market at the moment with respect to advice businesses, wanting to choose their technology providers. So I just wanted to unpack that with you guys and get some of your thoughts, and maybe give some activities or key takeaways that advisors can sort of start to think about now. So the first one, key finding 1. Tech providers are now broadening their offers to increase their relevance. However, this can lead to complexity for advisors. So I guess one of the key takeaways from this research is just how vast the technology landscape has become. We've got a lot of different products on the market, and decision-making can be a really daunting task, I guess, for advice practices. And it was evidenced in the report that technology providers are putting significant efforts into building out functionality to support advisors through that advice journey or the jobs to be done. Which is really good news, obviously, and really necessary in such a heavily regulated environment where the cost to serve clients is quite high, and reaching that end consumer is sometimes quite tricky. Technology can really help drive down that and help advisors reach more consumers. Obviously, technology can perform many functions. It can do a lot, but it does take time to understand what software can do and how you can fit your unique processes into a certain system. So this report was really good at analysing how technology is supporting advisors in the adoption of their solution, and we did see solid efforts from all of the technology providers in helping advisors understand their solution and also helping to implement their processes into their solution. So, Irene, what do you think?
Yeah, no, look, I think you make an excellent point there, Danni, and I really just want to reiterate what you said about the accelerated pace at which the optionality is building up. And it is, from what we've observed, the result of 2 compounding factors. So there are more providers, in this space, and all those providers are really, really prolific in terms of, the functionality that they're developing and some of the innovative features that they're bringing to market. So there's actually a particular visual in the report that I really like, because it shows in a very sort of simple but also clear way that view of the abundance of options that are available now to advisors. So we use like this 2-bucket approach, where we put in one bucket those homegrown providers, and in the other global providers, so just be able to understand the extent to which globalization is actually taking hold in this market. And so what we found was actually that between 2020 and 2021, there was already a trend toward globalization, but this was by virtue of a lot of M&A activity where Australian providers were being acquired by global providers. So, there's been the example of Morningstar, Advisor, Logic, Temenos, and Coin, and what have you. But in this past year, from 2021 and 2022, and the report does cover that 2022 sort of calendar year, both buckets actually grew significantly at the same time. And so we have on the global side many overseas players coming in our market, and actually our homegrown providers are also not to be distanced, and they're also also developing their own features. So that's really exciting to see, right? Because what that then brings to advisors, I think, is choice, and it's always great to have choice. You make the great that can cause some choice paralysis, but I think it's clearly a good problem to have.
Yeah, absolutely. I really agree with that. Paul, any thoughts?
Yeah, just would confirm that, in our interactions with all the contributors to the report, that we noted that they had been very active in developing and improving functionality and had been listening carefully to what the advisors and other users had been saying to them. So the results have been an expansion in functionality with a focus on solving pain points for advisors in generating advice. And some of the examples, that we came across were things like Ascendium have got a simpler, cost-effective SOA generation tool that they'd implemented. FE Analytics have a one-stop tool for research, analysis, portfolio construction, due diligence, and ongoing monitoring. And Practify have their single and unified workspace, which for everybody in the team within an advice practice. And there were many other examples of things that had been developed in that period to remove these pain points, improve efficiency, and help productivity within advisor practices. So really all very positive sort of developments for users of these tools.
Yeah. Actually, if I may just jump in here, Danny, just cognizant that we've been using that jobs to be done framework, and I think perhaps for your listener, they may be valuing expanding a bit more on what that means. So what we've looked at is, all of the jobs that an advisor does. So this is encompassing the advice production process, but then also the practice management, which is quite an important part of, running those businesses. So it goes from practice management, business intelligence, fact find, uncovering the need of advice with their clients, discovery and engagement, investment strategy, stuff just looking at the huge optionality around product that can be used and how we select the right ones for our client, advice production, advice implementation, monitoring, and then also revenue management and things like, fee consent and getting those that authority from clients on a regular basis. So as you can see, it's quite a broad spectrum of things to do. And what we've been really excited about is hearing from providers about the specific areas that they've decided to focus their efforts in the past, so, current state, but then also the development roadmap, which is very exciting as well.
Yeah, that's a really good point about explaining the jobs to be done. And I guess what we were trying to do there was to speak to the advisors and speak to the people that are and the technology providers themselves as well, just to give them that framework. And if you sort of, the way that we looked at the jobs to be done was essentially the workflow. So we're looking at client onboarding, we're looking at the discovery and fact finding, we're looking, as you said, to advice research and production, the implementation of that advice, the review of the client, and then the revenue management and practice insights. So hopefully, that sort of has helped really provide some relative language to advice providers and advisors as to how to interpret what's in the report. And I think, Paul, to your point as well, we did really find that the technology providers are actually really listening. They're very much proactively listening to what advisors have to say, and they are proactively taking on that feedback, and they're proactively putting things in the development pipeline, which is something we really haven't experienced with technology to date, really. So that was really pleasing to see as well. All right. Let's go to key finding number 2. So beyond simple data feeds, integrations between platform providers and advice tech are highly desirable, but still difficult to execute on. So I guess historically, if we just talk about integrations between technology providers, and specifically in financial advice, it's been portfolio evaluation information. So platforms sending through information to the advice CRMs, and then the advisors being able to see that information displayed as portfolio management, investment transactions, that sort of thing. That's typically done by what we call an API data feed. Given that advice businesses often have multiple applications in their tech stacks now, we're starting to see activities such as double handling of information across the applications that are being utilised in a business, and that can sometimes cause things like errors and double handling and double keying. So it's inefficient to obviously perform tasks in that way. So then advisors are looking to these applications to offer integration framework to get data automatically pushed and pulled outside of that typical investment data that we are aware of. And this is done through an API, but with APIs, they require developers on either side. So they require developers on the platform side potentially, or the application, and also on the advice CRM side to get involved, to put their time and effort into a project to make that integration happen, which of course translates to time and money and effort. So what we did observe is that integration is sort of really key when it comes to the development pipeline for technology providers, but it's still probably a reasonably new concept in Australia that stakeholders are getting their heads around. So we do see those lags in execution of effective integrations. Irene, what are your thoughts around this?
Yeah, no, I think that's a really kind of very well articulated, Danni, how you put the question. So there's always been a need about some form of integration. And I think, historically from all of our sort of advisor survey-based research, we've seen that data feeds have always been the number one integration that advisors are seeking from the technology provider. So that still remains the case. But I think much to your point, that need from integration is broadening and is going way beyond data feeds. So I actually kind of wanted to rewind a little bit and sort of make some observations about the changes that we've observed after the pandemic. So clearly COVID was, that sort of trigger moment which radically shifted the pace of adoption of technology across all businesses, and advice businesses were no different. And so what we've seen then as a result of that is actually that adoption of multiple systems in the day-to-day running of their practice, whether it's for client engagement or for setting up meetings or what have you, or, calculators and, all sorts of, functions in their business require different systems. So the proliferation of systems that are being adopted, which then immediately translate into the need for more integrations. So when we survey advisors, they're actually telling us, on an average basis in 2022, we had an average of 3.3 integrations that advisors say that they already use. So data feed number one, but then some of the growing areas are integration with CRM software, which you mentioned, online client fact-finding tools, risk modeling tools. And, all of these areas, I guess what is pleasing to see is that they're all reflected again in the functionality that advice tech providers are focusing their efforts on, and also focusing their efforts in establishing partnerships with platforms and other players to actually facilitate that integration for advisors. So I think the sharp focus that tech providers have around integration as an essential part of how they think about their build roadmap and the deployment thereof to advisors and users is really pleasing, and it's a testament of the fact that they are listening, which is a great reward for us, I would suggest.
Yeah, absolutely. Some really good points. And I think sort of previously the, at least the end-to-end advice tech providers wanted to be reasonably closed in and have users adopt all of the functionality that's sat within in their advice CRMs. But as we know, and advisors know, there isn't a holy grail, and sometimes they have unique needs and desires as to how they want to run their processes in their business. Therefore, they're going outside of the CRM to find those solutions that sort of sit around the core CRM. So, it's becoming a really big thing.
Yeah, absolutely.
Paul.
Yeah, just an observation on the difficulty around integration that you raised there, Danny. So in our platform benchmarking report, we provide gap analysis to the platforms around where they've got the biggest gap in capability in the things that we measure, and consistently it is around integration where they actually have the lowest sort of capability. And we know from comments that Irene was making before that it's a very highly desired capability by advisors. But pleasingly, when we were doing the research with the advice tech providers for this report, we noted that they had made some meaningful improvements during the period, and some examples that we came across were Advisor Logic had enhanced their integration with Finametrics. Advice Revolution's client portal was now fully integrated with Xplan, and that Hub24 had enabled their integration with Morningstar Sustainalytics to work seamlessly as well. So, some real sort of concrete examples of that improvement in interoperability. But nevertheless, we know from our other research that it is still a hard area for them to do. It requires resources, but we know that they're listening and that they are, making incremental improvements all the time around this integration conundrum.
Yeah, absolutely. Ending number 3. So this is, and Irene, you touched on this earlier, global entrants will keep local players on their toes. However, we only expect well-capitalised entrants to make an impact, and I guess this is sort of due to the shrinking advisor numbers and well-established incumbent providers making it difficult. So I guess to put this into context, the number of financial advisors has shrunk significantly. So we've had 26,500 in 2019, and that is at around about 15,500 now. So that's quite a drop. So the dynamic currently playing out is presenting a challenge for global entrants and global technology players to make a strong foothold in the Australian market. We've also got incumbent providers that have a strong foothold in the market and a presence here. So overhauling technology, I guess we need to acknowledge, in an advice business is a really massive undertaking. So the offer needs to be really compelling for an advisor to make the decision to jump to another solution. But that being said, advisors are looking for things like superior support options from the technology providers, and of course a functionality that reduces their costs to serve their clients. So we do anticipate that tech companies that are well capitalised and can deliver great functionality and support will be really well received. Paul, what do you think about that?
Yeah, absolutely. I think that any company that can continue to build out their value proposition will be well supported, and I guess advisors will be cognizant of the fact that if a provider was not able to continue to provide improvements, or that they felt that there was some reason that they may not stay in the market, that they may hesitate to engage with them, just from a point of view of the time invested to transition into, using that particular application. But the underlying driver for advisors is that anything that helps them simplify and shorten time to produce advice and improves their ability to manage their practice, that they will definitely be interested in having a look at. And that highly integrated solutions that enable them to seamlessly transfer their clients' information around from one application to another, also highly valued. And anybody that can provide that capability is definitely going to be in a more competitive position. But I think advisors read the news as well, and they're quite aware of making sure that the people that they do engage with are around for the long term. And so whether they're a local provider or an offshore provider coming in, that they will always take that into account. So yes, it is important.
Yeah, good points. Irene, any thoughts?
Yeah, no, perhaps I just want to maybe start with the comment that you made around well-capitalized firms. So it seems like every day of the week, it's quite a timely issue, isn't it? We've been hearing a lot about shortcomings of various accounting principles. But if we, without dwelling too much on the news headline, it is factual, though, when we look at the innovation that has occurred in the past, 2 years or so, that a lot of it was funded and driven by, VC money,
Mm-hmm.
which was quite abundant, let's say, and is perhaps, starting to sort of ease off a little bit. And so absolutely agree with your point that, having a strong balance sheet, and in that regard, the incumbent players are at an advantage. Having a strong balance sheet will certainly help navigate those ebbs and flows of the sort of uncertain economic times that we perhaps about to sort of dive into. But just going back to the point that you actually made before, Danny, to succeed in this environment, it is really around maximizing or perhaps helping advisors, supporting advisors in understanding how to use the functionality that is provided to them and actually maximize that functionality that they're paying for. So our advisor technology research shows that advisors are actually quite open to invest significant amounts in their tech, right? So they're actually happy to fund that. But it's important to demonstrate value as for everything, right? It's important to demonstrate value to the, advised client outcomes, but also the advisor and their practice. So it is incumbent, no pun intended here, but it's incumbent on technology providers to actually demonstrate that and help advisors maximize that value. And I think that's kind of the pathway to success for them.
Yeah, really good points. And I think maybe a takeaway for advice businesses is if they are looking to these global providers as a potential solution in their technology roadmaps is to do their due diligence. I think that's really important to do the due diligence on those providers. That could include, obviously, having demos, but don't just have one demo. Have a few demos. Bring your team in. Bring different members of your team who do different functions in your business, who might view that technology in a different way or utilize it in a different way. Is a really important thing. And to also, wherever they're coming from, if it's the UK or the US, perhaps looking at the foothold that they have in those other jurisdictions as well is probably a key takeout that advisors can start to think about.
Mm-hmm. And so you made that point as well, Danny, around the fact that it's a huge undertaking for an advice practice to actually adopt new technology. It is, of course. But what we've also found with COVID is that there's greater appetite, much greater than there has ever been before. I think it's fair to say there's greater appetite for change. Because we suddenly had to change quite a lot, and suddenly perhaps the threshold for that sort of change has been elevated. So advisors are open, but it's really about what's the value for me, for my clients, for my business. That's what providers need to demonstrate. Yeah,
absolutely. Points. All right. This is a big one. I feel this is a key finding number 4. So there's evidence in the research that many providers are currently developing or looking to enhance their client portal offerings. We think cyber awareness is going to drive the uptake of these portals. So just to, I guess, give some scary stats, every 7 minutes we've got a cybercrime incident reported in Australia, and the average cost of a cyber report is between $39,000 and $88,000. So this is something that needs to be taken very seriously in financial planning businesses. Financial planning businesses hold the most personal and sensitive information about their clients, and it's really no longer a safe option to be emailing advice documents and fact finding documents to and from your clients. So a client portal offers a secure and visually appealing way to share and engage with your clients. And at the moment, we have a little over 40% of advice businesses utilising a client portal in Australia. And we're really pleased to see, obviously, new entrants coming in and establishing a foothold with their client portal offerings, but also the end-to-end providers investing heavily in their client portal functionality as well. So that was really evidenced in the report. Paul, I'll hand over to you. What are your thoughts around this one?
Yeah, the really important point, Danny, and we were pleased to see in the providers that we spoke to that they had strong offerings for their client portals. In our just recently released platform benchmarking report, we noted that all the retail platforms that now offer a client portal, and that we know from our other research with advisors that they do strongly desire an ability for clients to update their own details themselves, to upload documents, needed in the advice process to monitor transactions as they go through and to keep track of how their money is invested. Also within the platform environment, many of the actions within the platform now require MFA, multi-factor authentication, which consumers are rapidly growing used to and becoming comfortable with, and this just only adds to the improved cybersecurity environment for safekeeping. It is very important that the advice technology platforms have really best in practice cybersecurity capabilities, because there is so much incredibly important personal information kept on them, more so than in almost any other sort of centralised forum you can think of. But it was pleasing to see that a lot of them have got this capability, and that clients and users are adopting it and are comfortable using it. So yeah, we thought that had been an important development that we observed in the research process this year.
Yeah, good point. And I like your point around, the efficiency that comes in from a client potentially filling in some fact find data or whatever it might be as part of that onboarding process. That seems to be like a very big roadblock from an efficiency perspective in an advice business. But I also think advisors have been a little bit scared potentially to give access to a client portal to their clients for a variety of reasons. But as you say, Paul, I think that. And Irene, to your points about COVID, clients now, and we're all very used to going online and getting our information and having our meetings and using client interfaces in whichever way we need to with our banks or whatever else it is that we're doing. So I feel like that is, becoming a less of a concern for clients. Even obviously our older clients have had to get their heads around using technology in COVID. So they've got their heads around that now, so it's a good time to sort of start adopting that into the common value proposition. What are your thoughts around cybersecurity and client portals, Irene?
Well, look, Danni, one of the pleasing observations that I like to start with is actually the fact that we now have a lot of information about the incidents or, the frequency of those incidents. I think there used to be a bit of stigma attached to even reporting in the first place. And so, a lot of that nefarious action was happening, but no one actually had a clear sense of, how often. So it's great that the stigma is kind of disappearing and people are actually quite open about reporting that an incident has occurred, because that's how we learn. But I think, if you rely on some of the high-profile incidents that we've seen recently, it's really, really important to be moving as fast as we can on the technology front. But, what we hear a lot about is that the bad actors are kind of catching up and perhaps moving even faster. Mm-hmm. So the crux in our view of solving this issue potentially is that human behavior aspect, right? It's really around shifting that in a quite foundational way, I'd like to say. So it's all about, with the technology, so that's great, but it's also important to accompany that with education and making sure that people know what to watch out for. And so that huge education piece is something that tech providers also really need to, I guess, put in their roadmap as well and implement.
That's a great point. I really like that around education, because I guess advisors and advice businesses can almost play a key role in educating their clients around cybersecurity and how to handle their data and that sort of thing. So I think, that's a really, really good point.
Yeah.
And as you say, things with ChatGPT and AI and that sort of thing, the actors are getting better and cleverer, and the text messages we're getting from scammers are sounding more and more real.
Indeed. And I think it's important to kind of not be scared about the tech, progress. I think it's great. There's so many positive outcomes, right? And so having cybersecurity as a challenge shouldn't deter us from still sort of pursuing and adopting technology. It's just really important to be educated and be sort of watchful of, the hopefully smaller bad implications that also go with progress.
Yeah, absolutely.
Yeah.
Well, thank you, guys. We've gone through 4 of those key findings and 4 of those sort of key insights, I guess, that we've pulled out and extracted from such a comprehensive report. So thank you very much for joining us today, Dr. Irene Guiatmasa and Paul McGivern from Investment Trends. And so we'll have further information in the show notes about how you can access the 2022 Advisor and Advice Technology report. Thank you to our audience so much for listening to another episode of Finura Group's podcast, The Game of FinTech. If you haven't already, make sure you subscribe to this podcast so that you can stay up to date. Follow us on LinkedIn or check out our website at www.finuragroup.com.